Hi friends, let us continue our discussion with revision. Now we will be revising section 15 to from section 15 till section 21, which is value of supply and rules of value of supply plus the input tax credit chapter. Okay, section 15 talks about value of supply. Section 15 subsection 1 says that value of supply is transaction value, which is the price actually paid or payable where the supplier and recipient are not related and price is the sole consideration. Section 15 subsection 2 talks about inclusions in value of supply. What are you required to include in value of supply? Inclusions in value of supply is totally 5 inclusions. Section 15 subsection 2 talks about inclusions in value of supply. 1. Inclusions in value of supply is all taxes other than GST is required to be included. There is an amendment which is made, there is a clarification which is given, which told that TCS is not required to be included in value of supply. TCS, though it is a tax, is not required to be included. It is not required to be deducted while computing value of supply. TCS is something which you should include in value of supply. So inclusions in value of supply: all taxes other than GST. Then third party payment, that is payment which is made by the recipient to the third party which the supplier had to incur, or payment made by the recipient which the supplier had to incur. Then incidental expenses, any incidental expenses which you are incurring for making this particular supply. Then interest, penalty, late fee for delayed payment of consideration. Please note that this interest, penalty, late fee is always inclusive of GST. If you receive an interest of rupees 10,000, then you should compute 10,000 into 100 divided by 118. This amount, whatever you arrive after doing this calculation, is required to be added in value of supply. Then subsidy which is directly linked to the price, excluding the subsidy which is given by central government and state government, is required to be added in value of supply. Please note that this subsidy should be linked to the price directly, Then section 15 subsection 3 talks about exclusions from value of supply. What is required to be excluded? Only discount is required to be excluded. Discount is required to be excluded from value of supply. Discount which is given either before or after. Both of these discounts are covered. Discount which is given before supply or after supply. If discount is given before supply or at the time of supply, then the discount can be excluded from value of supply if it is shown separately in the invoice. Only thing is, if discount is given after supply, it is important. If discount is given after supply, then it will be excluded only if 3 conditions are satisfied. What are the 3 conditions? It should be agreed between the supplier and recipient that discount will be given, and it should be linked to a specific invoice, and input tax credit is required to be reversed by the recipient. ITC will have to be reversed by the recipient. Then section 15 subsection 4 says that if you are not able to find value of supply as per section 15, then please find the value of supply as per rules. Section 15 subsection 5 is also there, which talks about value of supply in some cases may be determined by government. Okay. Rules. Section 15 subsection 5 talks about rules. Rule number 27. Rule number 27 talks about when consideration is not wholly in money. When consideration is not wholly in money, value of supply will be open market value. If open market value is not available, money plus fair value of other consideration. If money plus fair value of other consideration and open market value both are not available, then value of like, kind and quality. If all these 3 are not available, rule 30, 31 in that order. Rule number 28. Value of supply in case where supply is made to related person or deemed distinct person. When supply is made to related person, value of supply will be open market value. If open market value is not there, value of like and quality. If that is also not there, rule 30, 31 in that order. There are 2 provisos. There are 2 provisos for rule number 28. This proviso says that if goods are supplied as such, if the goods are supplied as such by the recipient to his customer, then the supplier can take, at his option, can take value of supply to be equal to 90% of the amount charged by the recipient from his customer. Then proviso number 2 says that declared value or the value which is declared in the invoice can be taken as value of supply if recipient is eligible for full input tax credit. Then rule number 29 talks about supply made to a agent. Supply where supply made is made to a principal to agent or vice versa. Value of supply to be determined as per rule number 29. Value of supply is open market value or 90% of amount charged by the recipient from his customer who is a non-relative. This is an option. What is an option? 90% is an option, or rule 30, 31 in that order. What is rule 31 talking about? Rule 31 talks about cost-based valuation. Rule 30 says that value of supply will be 110% of cost of production, or 110% of cost of acquisition, or 110% of cost of provision of services. Then rule 31 is a residual rule, which says that if you are not able to find value of supply as per the above rules, then find the value of supply by applying the principles of section 15 consistently and reasonably. Then there is one more rule, rule 31A, which talks about valuation in case of lottery distributor. In case of lottery distributor, 2 arrow marks, lottery can be run by state government, or lottery can be run by any person authorized by state government. It can be run by state government, or it can be run by any person authorized by state government. If it is run by state government, value of supply will be equal to face value. Face value is the ticket price. Face value of the lottery into 100 divided by 112. Face value of lottery into 100 divided by 112 will give you value of supply. GST is required to be levied on value of supply. This is value of supply in case the lottery is run by state government. If lottery is run by any person authorized by state government, then value of supply is equal to face value into 100 divided by 128. It is face value into 100 divided by 128 will be the value of supply. Then rule number 32. See, whatever is specified in rule number 32. Rule number 32 one says that whatever is specified in rule number 32 is just an option which is given to following people. So rule number 32 sub rule 2 talks about value of supply in case of a forex dealer or a money changer. Value of supply, forex dealer or a money changer has two options. Option number 1, where 2 arrow marks, currency exchange involves Indian rupees, currency exchange does not involve Indian rupees. If currency exchange involves Indian rupees, then value of then is RBI rate available? If RBI rate is available, then whatever rate currency exchange is charging minus whatever rate is given by RBI into number of unit exchange will be value of supply. If currency exchange does not involve, if RBI rate is not specified for the currency which is exchanged, then rupee value of the currency which is exchanged, rupee value of currency exchange into 1% will be value of supply. Now then, if the currency which is exchanged does not involve Indian rupees at all, then find the rupee value of currency which is bought, find the rupee value of currency which is sold, then whichever is less into 1% will become value of supply. Then option number B. Option B gives the slab rate. It is like income tax slab rate. So value of supply under option B. Value of supply, if the currency exchange, if the gross currency which is exchanged is up to rupees 1 lakh, then value of supply will be rupees 250 or 1% of gross currency exchange, whichever is higher. If the amount which is exchanged is from 1 lakh till 10 lakhs, that is from 1 lakh 1 rupees till 9 lakh 99 till 10 lakh rupees, then value of supply will be 1000. 1000 is the for 1 lakh it is 1000, 1% of 1 lakh. So in case it is from 1 lakh to 10 lakhs, 1000 plus 0.5%. 0.5% in the sense 0.5% of gross currency exchange. Then if it is more than 10 lakh, then 5,500 plus 0.1% of gross currency exchange, or rupees 60,000, whichever is higher. Then rule number 32 3 talks about air travel agent. In case of an air travel agent, value of supply, 2 arrow marks, air travel agent, if it is domestic travel or international travel. If it is domestic travel, value of supply is 5% of base fare, and if it is international travel, 10% of base fare. Please note that the value of supply is to be computed on base fare. Now the ticket price includes different items also, like base fare, surcharge, taxes, etc. Value of supply should be computed only on base fare. Then rule number 32 sub rule 4 talks about life insurance agent. Value of supply in case of life insurance agent. Now we'll generally talk about insurance business as a whole. Now insurance business can be of two types. One is general insurance, one is life insurance. If it is a general insurance, value of supply is whatever premium you are charging. Value of supply will be gross premium charge. In case it is a life insurance, then 2 arrow mark. Is it a risk policy or saving policy? If it is a risk policy, then value of supply is whatever premium is charged. If it is saving policy, then 3 arrow mark. Amount allocated towards investment is intimated to you. Value of supply is if amount allocated towards investment is intimated to you, value of supply is gross premium charge minus amount allocated towards investment. If amount allocated towards investment is not intimated to you, value of supply will be 25% of gross premium charge for the first year, and for the subsequent years it will be 12.5% of gross premium charge. Then if it is a single premium policy, then 10% of gross premium charge will be value of supply. Then rule number 32 sub rule 5 talks about second hand goods. Value of supply in case of what? Second hand goods. In case of second hand goods, value of supply will be second hand goods to or much. You can be either a dealer of second hand goods or a repossession of second hand goods. In both the cases, value of supply is same. Value of supply is selling price minus purchase price. Selling price minus purchase price. If you are a dealer, then value of supply, you can either take input tax credit or not take input tax credit. If you are taking input tax credit, value of supply is selling price. If you are not taking input tax credit, value of supply is selling price minus purchase price. If it is a case of repossession, if it is a case of what? Repossession of second hand goods, then value of supply will be selling price minus purchase price. Here purchase price is required to be computed. Purchase price is actual purchase price minus 5% per quarter or part of quarter. Part of quarter is also required to be treated as 1 quarter. So 5% per quarter or part thereof to be computed till the date of sale. So you will have to give a depreciation at 5% per quarter. Even a part of quarter, that is even 1 day of a quarter will be treated as entire quarter. You will have to give depreciation and find the purchase price. Then rule number 32 sub rule 6 talks about value of supply in case of vouchers. In case of vouchers or coupon, value of supply will be whatever item you have purchased, the value of that particular item will be value of supply. Then rule number 33 says that expenses which is incurred as a pure agent should not be included in value of supply. Whatever expenses you incur as a pure agent should not be included in a value of supply. Rule number 34 talks about exchange rate to be taken. Exchange rate to be taken in case supply is made outside India. If the denomination is in foreign currency, then exchange rate to be taken is, in case it is supply of goods, then go to customs CBIC rate notified by CBIC, and computation is as per section 14 of Customs Act. Then if it is supply of services, gap rate, that is generally accepted accounting principle rate. That is whatever is agreed between you both. Then rule number 35 says that if the value is inclusive of GST, how to find GST amount? It is value whatever amount you have received into 100 divided into whatever the GST rate is there, divided by 100 plus GST rate is there. That is how to find value of supply if it is inclusive of taxes. Then input tax credit will start. Section 16 talks about eligibility and conditions of input tax credit. Section 16, who is eligible? Every registered person is eligible for to take input tax credit on goods and services or both, which is used or intended to be used in the course or furtherance of his business. Section 16 subsection 2 talks about condition. There are totally 4 conditions for taking input tax credit. Condition number 1, he should be in possession. Who? Registered person should be in possession of tax invoice. Registered person should have actually received the goods or services. Then the supplier should have paid the taxes, and the recipient, that is the registered person, should have filed his returns. Now, registered person should have actually received the goods and services. For this, there is a explanation which is given, which says that if the goods are delivered to a third person, if the goods are delivered to a recipient on the direction of the registered person, then if the recipient receives the goods, it is deemed that the registered person has received the goods. That means if the delivery is made to a third person on the direction of registered person, then ITC can be taken by the registered person. It will be deemed that the goods have been actually received by the registered person once the third person is receiving the goods. Then there are provisos for section 10 subsection 2, which says that if the goods are received in lots or installment, then ITC can be taken only when you receive last lot or last installment. Then provision number 2, if you don't make the payment within 180 days from the date of invoice, then you will have to reverse the input tax credit which is already taken by you, along with interest at 18%. Along with interest at 18%. What is this telling? If you are not making payment within 180 days, you will have to reverse input tax credit along with interest at 18%. Interest is required to be calculated from the date of taking the credit till the date of reversal of credit. And there is provision number 3 which is telling you can take input tax credit once the payment is made. Section 16 subsection 3 talks about says you cannot if you are claiming depreciation on the tax component of the capital goods, then you cannot take input tax credit. Section 15 says that last day to take input tax credit, last day to take input tax credit for any invoice pertaining to a financial year is date of filing annual return for that financial year, or due date of filing return for the month of September for next financial year, whichever is earlier. Then section 17 talks about apportionment of ITC or apportionment of credit and block credit. What does section 17 talks about? Section 17 says that if the goods or services are used for business purpose and non-business purpose, take ITC only proportionately for business purpose. 17.2 says that if the goods or services are used for taxable purpose including zero rated supply and exempt purpose, take ITC only proportionately only for taxable purpose. 17.3 says that in 17.2 I am talking about exempt supply. That exempt supply shall include sale of land, sale of building, transaction in securities and supply liable to reverse charge. Then 17.4 says that if you are a banking company or an NBFC, then for you, if you are a banking company or an MDSP, you can, instead of following 17.2, can take, because banks majority of the interest expenses which they are making is normally exempt, so banks can, instead of following 17.2, can follow 17.4, wherein 50% of eligible input tax credit you can straight away take, instead of following 17.2, the proportionate basis. How will I calculate? As per rule number 44, I calculate the proportionate basis. 17.4 says that instead of following that particular rule, you can straight away take 50% of eligible ITC as input tax credit, then other 50% shall lapse. Option 1's exercise should be followed for the entire financial year. Now, sir, what is rule number 44 telling? Sir, how will I apportion? You are telling proportionately you should distribute. How will I do the proportionate? The rule number 44, rule number 42. Rule 42 is telling that first write whatever the total input tax credit is there, whether it is because of exempt purpose, non-exempt purpose, business purpose. From the total input tax credit, subtract what is exclusively for exempt purpose, subtract what is exclusively for non-business purpose, subtract what is exclusively blocked under section 17.5. Now, from the total input tax credit, subtract what is exclusively for exempt purpose, what is exclusively for non-business purpose, and what is exclusively blocked. You will get an amount. This is the amount of which will get credited to your electronic credit ledger. That is, this is the amount which will get credited. From this, you subtract what is exclusively for business purpose, because this 100% ITC can be taken by you. Then whatever you get is called as common credit. Whatever you get is called as common credit. Now, this common credit is required to be apportioned to business purpose, non-business purpose, and exempt purpose. So it will be apportioned to exempt purpose. Exempt purpose, it is equal to common credit into E by F. Common credit into E by F, in the sense common credit, whatever you have found over here, into E. That is the turnover of exempt supply divided by the turnover turnover exempt supply divided by total turnover of that particular period. What if exempt supply is not there in this period? Then go to previous period. E by F of last period should be taken wherever it is available. Then sir, this is for exempt purpose. Then what for non-business purpose, sir? They are telling straight away common credit into 5% will be for non-business purpose. Then whatever is left over, after this particular calculation, whatever is left over in common credit will be the ITC which you can take. That is the ITC which will be apportioned towards business portion. That is the ITC which is apportioned towards business portion, and you can take input tax credit of that particular ITC. Now, this particular calculation which you are doing should be done again at the end of the year, and if you have done excess reversal, take back the credit. If you are reversed less, then reverse the balance amount. Now, Section 17.5, now it becomes very important because there are a lot of amendment made in 17.5. 17.5 talks about block credit. Section 17 subsection 5, motor vehicle. Motor vehicle is blocked. Now, motor vehicle, amended law says that motor vehicle to R-mark for transportation of goods, any person can take input tax credit. For transportation of services, then to R-mark, is it more than 13 seater or less than 30 seater? More than less than, which I am talking, is inclusive of the driver. If it is less than 13 seater, ITC cannot be taken. ITC can be taken only by following persons: if you are a dealer of motor vehicle, if you are further supplying motor vehicle, or if you are into the business of imparting training in the motor vehicle, or if you are in the business of transportation of passenger, you can take. If it is less than 13 seater, if it is more than 13 seater, then ITC can be taken by any person. If it is for transportation of goods, any person can take input tax credit on motor vehicle. Then other conveyances such as aircraft vessel, normally ITC cannot be taken. ITC can be taken if it is for further supply of that particular conveyance, or it is for imparting training in that conveyance, and if you are giving that vehicle on hire, or that is further supplying, or it is for the purpose of transportation of passenger. Then general insurance, repair charges, service cost which is incurred for transportation of passenger. Whatever service cost, general insurance cost which you are incurring for this motor vehicle or the conveyance, ITC can be taken only if ITC is eligible in the above two cases. In there are few other cases wherein if you are a manufacturer of motor vehicle, then also you can take service cost as the ITC on service tax, or if you are an insurance into the business of insurance or reinsurance, you can also take input tax credit on the motor vehicle. What are the other block credit? Beauty treatment, restaurant services, then life insurance, renting of a cab, etc. All these services ITC cannot be taken. Normally ITC cannot be taken, but you can take ITC. You can take ITC if it is a statutory obligation on you. If it is a statutory obligation on the employer to give all these beauty treatment, food decks, all this life insurance, health insurance, fitness services to employees, then ITC can be taken. If it is not a statutory obligation, you cannot take ITC. Then you can take ITC if you are involved in the further supply of same line of business. Means if you are into the business of providing beauty treatment, if you take services of a beautician, you can definitely take input tax credit. Then other items covered in block credit is works contract services in relation to construction of a movable property other than plant and machinery, goods and services used for construction of movable property other than plant and machinery, goods or services which is used for personal consumption, ITC cannot be taken. Then purchases made under section 10, ITC cannot be taken. A non-resident taxable person cannot take input tax credit other than the goods which is imported by him. Then goods which is lost, destroyed by fire or etc. ITC cannot be taken. Goods which are given as free samples, ITC cannot be, or gift, ITC cannot be taken. And if you are paying taxes because of 73, 74, 129, 130, then ITC cannot be taken. That is fraud cases. Okay. Section 18. Section 18 talks about input tax credit in special circumstances. Section 18 subsection 1 clause A. If you are a person who is liable for registration and you have applied for registration within 30 days, you can take ITC on whatever stock is lying with you one day before the date of your liable for registration. 18(1)(b). If you take voluntary registration, you can take ITC of whatever stock is lying one day before the date of grant of registration. 18(1)(c). A composition dealer is becoming regular dealer. ITC can be taken on all the stock which is held with him and also the capital goods one day prior to he becomes a regular dealer. 18(1)(d). If exempt supplies become taxable supply, ITC can be taken on whatever stock is there one day before it become taxable, and whatever capital goods is there one day before it becomes taxable. Then 18(2) talks says that 1 year old invoice, ITC can be taken only for invoices which is older than, if the invoices are more older than 1 year, you cannot take ITC. That is within 1 year period you can take ITC. 18(3) talks about change in constitution of business. Whenever there is a change in constitution of business, then ITC can be taken by new person, provided that there is a specific provision of transfer of liability, provided that the liability should also have been transferred. 18(4), if a regular dealer becomes composition dealer or taxable supplies becomes exempt supply, then ITC will have to be reversed by you. What will have to be reversed? ITC on the capital goods and the stock which is lying one day before it becomes taxable or you become composition dealer, you will have to pay ITC. Then 18(5) talks about rules for computing above. 18(6) says that, beautiful, 18(6) is an important point which says that if you in case you are supplying or you are selling capital goods or plant and machinery, then ITC will have to be reversed by you. What ITC will be reversed by you? ITC to be reversed by you is the particular capital goods into the tax rate which is applicable for capital goods, tax calculated on the transaction value, or reduce 5% per quarter or part thereof in the input tax credit from the date of purchase till the date of sale, whichever is higher is required to be reduced by you. That is tax as on value of supply under section 15, or tax on purchase price of capital goods, tax on purchase whatever you have paid, reduce it by 5% per quarter or part thereof. Then section 19. Section 19 talks about supply made to a job worker. Section 19, goods sent to a job worker. Whatever section 19 subsection 1 says that whatever goods you have sent to, whatever inputs you have sent to a job worker, ITC can be, whatever inputs are sent by principal to a job worker, principal can take input tax credit. Then 19(2) says that if the inputs are sent directly to the job worker, ITC can be taken by principal. 19(3) says that if the inputs which are sent to the job worker does not come back within 1 year, ITC which is taken should be reversed. That is, it will be deemed as supply has been made. Section 19 subsection 4. Section 19 subsection 4 talks about capital goods. If the capital goods are sent by principal to a job worker, ITC can be taken by principal. If the capital goods are sent directly, 19(5), if the capital goods are sent directly to the job worker, ITC can be taken by the principal. And 19(6) says that if the capital goods which is sent to a job worker does not come back within 180 days, then whatever ITC is taken should be reversed. Whatever ITC is taken should be reversed. Does not come back. In case of capital goods it is 3 years, and in case of normal goods it is 1 year. Then section 20. Section 20 talks about distribution of credit by input service distributor. Input service distributor can distribute the credit which is accumulated by him. How will he distribute it? If the credit which is accumulated is pertaining only to one unit, then distribute only to one unit. If it is for more than one unit, distribute it to the more than one unit based on the proportionate basis based on the turnover of relevant period. If it is for everyone, if it is for one unit, distribute only to one unit. If it is for more than one unit, distribute it to each of units. If it is for all the units, then distribute it to everyone based on their turnover of relevant period. Sir, what is relevant period over here? Relevant period over here is turnover of last financial year. Sir, what if turnover of last financial year is not there? Then turnover of last quarter for which it is available. Available. So distribution of ITC by input service distributor is to be made based on the turnover of the companies to which it is pertaining to. Then section 21 says that if input tax credit has been excess distributed by input service distributor, if ITC has been excess distributed by input service distributor, and then he can recover the same. Now there is one more point which I will discuss on input tax credit, which is utilization of credit. Utilization of credit. How do I utilize the credit? IGST, CGST and SGST. IGST should first be utilized for payment of IGST, then utilize. Now we will take IGST, CGST and SGST. This is output and this is this is output and this is input. IGST, if you have payable, IGST input should be used first for payment of IGST, then use IGST for payment of CGST or SGST. Second preference is CGST or SGST in whatever proportion you want. Then go to CGST. You can go to CGST only once the IGST component, or you can go to SGST once the IGST is exhausted. So IGST first preference is IGST, then CGST or SGST in whatever proportion you want to distribute. Once IGST is completely exhausted, then go to CGST. CGST first preference is CGST, then it is IGST. CGST can never be utilized for payment of SGST. Similarly, SGST first preference is SGST, then IGST. It can never be utilized for payment of CGST. Okay friends, so this particular video we covered from section 15 till section 21. Now the next videos which will come will be on procedural aspects and the other topics which is not covered here. Thank you.